You just got your CPP payment. You're looking at your bank statement and everything seems normal. But here's what most Canadian seniors don't know. Hidden inside your CPP statement are 3 little codes that could mean the difference between getting every dollar you're entitled to and leaving thousands on the table. And I'm betting right now you have no idea what those codes actually mean. I'm talking about codes 105, 121, and 150. These numbers show up on official government documents, and they're telling you exactly what type of CPP benefit you're receiving. But Service Canada never really explains this stuff, do they? They just send you the money and hope you don't ask questions. Well, today we're asking all the questions because understanding these codes could literally change your retirement income for the rest of your life. So, if you've ever looked at your T4A slip or your CPP statement and wondered what those box numbers mean, or if you're not even sure you're getting the right type of payment, stick with me because by the end of this video, you're going to know more about CPP payment codes than most bank tellers and maybe even some Service Canada staff. And trust me, knowledge is money when it comes to government benefits. Let me start with the big one. Code 105. Now, this isn't officially called Code 105 by Service Canada, but it shows up in Box 105 on certain tax slips, and it's connected to your basic CPP retirement pension. This is the payment most Canadian seniors know about. You work for decades, you pay into CPP through your paychecks, and when you hit 60 or older, you can start collecting. Simple, right? Well, not quite. Here's what they don't tell you about your standard CPP retirement payment. The maximum amount you can get in 2026 if you start at age 65 is $1,660 per month. That's the max. But the average Canadian senior, they're only getting around $83. That's a $700 gap every single month. Why? Because most people don't understand how CPP calculates your benefit, and they don't plan ahead. Your CPP retirement benefit is based on how much you contributed and for how many years. If you worked full-time, making decent money for 40 years, you're probably close to that maximum. But if you took time off to raise kids, if you had years with lower income, or if you didn't work the full 40 years, your benefit drops. And here's the kicker. Most people have no idea what their actual CPP amount will be until they apply. They just assume they'll get the full amount because they worked their whole life. Wrong. So, if you're getting regular CPP retirement payments, that's showing up connected to this first payment type. But here's where it gets interesting. Not everyone getting CPP is getting the same type of benefit. And that brings us to the other codes. Now, before we go further, let me tell you something important. I already made a full video breaking down Code 105 and the CPP retirement pension in detail. If you want the complete breakdown of how to maximize your retirement benefit, you can find that video on the end screen or click the I button above. It's worth watching because I go deep into strategies most people miss. All right. Let's talk about what happens when you're not just getting retirement benefits, because CPP isn't just one payment. It's actually multiple different benefit types, and each one works differently. And this is where codes 121 and 150 come into play. Let's say you're a widow or widower hour. Your spouse worked, paid into CPP their whole life, and then they passed away. You might be eligible for something called the CPP Survivor's Pension. This is separate from your own retirement benefit. It's money based on what your late spouse contributed, and depending on your age and situation, you could be getting both your own CPP retirement and the survivor benefit at the same time. Here's how survivor benefits work in 2026. If you're 65 or older and you're Not getting your own CPP retirement yet, you can receive up to 60% of what your late spouse was getting. So if your spouse was receiving the maximum $1,500 a month, you'd get around $900 as a survivor. That's real money. But if you're already getting your own CPP retirement, the calculation changes. They combine the two benefits, but cap the total amount you can receive. The maximum combined survivor and retirement benefit is around $1,130 a month. Now here's where people get confused. Let's say you were getting your own CPP retirement of $800 a month. Your spouse passes away, and they were getting $1,000. You think, great, now I'll get their $1,000 on top of my $800. Nope. Service Canada combines them, but they don't just add them together. The formula is complicated, and you end up with less than you expected. This is why it's critical to understand exactly what type of benefit you're receiving and how they interact. And if you're under 65 when your spouse dies, the survivor benefit amount changes. Again, younger survivors get a flat rate portion plus a percentage of the deceased's retirement pension. It's a whole different calculation. The point is, survivor benefits are their own category, and they show up differently on your statements. Now let me throw another one at you. CPP disability. This is the benefit people really misunderstand. If you become disabled and you can't work anymore, you might qualify for CPP disability benefits. But this isn't automatic. You have to apply. You have to prove you have a severe and prolonged disability. And frankly, a lot of applications get denied the first time around. It's frustrating and a lot of people give up. But if you get approved, the payments are significant. In 2026, the maximum CPP disability benefit is $1,241 per month. That's even more than the regular retirement pension. Why? Because if you're disabled, you're not working, and CPP is replacing your lost income. The average person on CPP disability gets around $1,192 a month. Not bad, but again, nowhere near the maximum. Here's what's wild. CPP disability can also be combined with other benefits. If you're receiving disability and then your spouse passes away, you might be eligible for the survivor's pension too. The maximum combined disability and survivor benefit in 2026 is $1,256 per month. But once you turn 65, CPP disability automatically converts to regular CPP retirement. You don't get to keep collecting the disability amount forever. It switches over and your payment might actually drop. So why am I telling you all this? Because when you get your tax slip at the end of the year, when you're looking at your CPP statement, when you're trying to figure out if you're getting all the money you're supposed to, these different payment types matter. They show up in different boxes on your T4A slip. And if you don't know what you're looking at, you could be missing out on benefits you're entitled to. Let me give you a real-life example. I know a woman, she's 72 now, been retired for 7 years. Her husband passed away 5 years ago. She was getting her own CPP retirement around $700 a month. When her husband died, she applied for the survivor benefit, but she never really understood how much she should be getting. She assumed Service Canada would just figure it out and send her the right amount. Fast forward 3 years, she's talking to a friend who's in a similar situation, and the friend is getting way more money. Turns out, this woman's survivor benefit was calculated wrong. She had to fight with Service Canada, provide all kinds of documentation, and eventually they corrected it. But she lost 3 years of payments, thousands of dollars gone. This stuff happens more than you think. Service Canada is a giant bureaucracy. Mistakes happen, payments get miscalculated, benefits get missed, and if you don't know what you're supposed to be getting, how are you ever going to catch the error? That's why understanding these payment codes and categories is so important. It's not just about curiosity. It's about making sure you're getting every single dollar the government owes you. You paid into this system your whole working life. Don't leave money on the table now. So let's talk about how to check. First thing, get your hands on your most recent T4A slip. This is the tax slip Service Canada sends you every February for the previous year's CPP payments. On that slip, you'll see box numbers. If you're getting basic retirement, it'll show in one box. If you're getting survivor benefits, that's a different box. Disability, different box. Each payment type is separated out so that when you file your taxes, everything gets reported correctly. Now, if you're looking at your T4A and you're thinking, I should be getting a survivor benefit, but I don't see it listed, that's a red flag. That means either you're not enrolled for it or there's been a mistake, and you need to contact Service Canada immediately. Don't wait. Don't assume it'll fix itself. Call them, ask questions, and get it sorted out. Here's another secret most people don't know. You can actually apply for CPP benefits online now. You don't have to go into a Service Canada office. You don't have to mail in forms. You log into your My Service Canada account, and you can apply for retirement, survivor, or disability benefits right there. It takes maybe 20 minutes, and once you're in the system, you can see exactly what you're getting and when your payments are scheduled. If you haven't set up your My Service Canada account yet, do it today. Seriously, pause this video, go do it, and then come back because that account gives you access to all your benefit information. You can see your CPP statement of contributions. You can check your payment history, and you can even update your direct deposit info. It's all there. Now let me give you some numbers for February 2026 because we're living in the present here. CPP payments went up by 2% at the start of this year. So if you were getting $1,000 a month in December 2025, you should be getting $1,020 now. Not a huge jump, but it's something. The maximum retirement at 65 is now $1,765, up from around $1,278 last year. If you're on disability, the max is now $1,740. If you're getting survivor benefits, the amounts vary, but they all went up by that same 2%. This happens every January. CPP benefits are indexed to inflation, so they rise to keep up with the cost of living. It's not always enough, but at least it's something. Here's a question I get all the time. If I'm already retired and getting CPP, can I still work? Yes, absolutely. You can collect CPP retirement and still have a job. In fact, if you're under 70 and you're working while collecting CPP, you're still paying into the system. And those contributions go towards something called the CPP post-retirement benefit. This is a small additional amount that gets added to your monthly payment every year. Most people don't even know it exists, but if you keep working into your late 60s, those post-retirement contributions can add up to an extra $100 or $200 a year. It's not life-changing, but hey, free money. All right, I want to give you some action steps because information is only useful if you actually do something with it. So, here's what you need to do after watching this video. Number 1. Find your most recent T4A slip or CPP statement. Look at what type of payments you're receiving. Make sure it matches what you think you should be getting. If something looks off, write it down. Number 2. Log into your My Service Canada account. If you don't have one, create it. Check your payment history. Look at your CPP statement of contributions and confirm your direct deposit information is correct. This is your financial future. Take 10 minutes and make sure everything is right. Number 3, if you're eligible for survivor benefits or disability and you haven't applied, do it now. Don't wait. These benefits don't happen automatically. You have to apply. And the sooner you apply, the sooner you start getting paid. Number 4, If you think there's been a mistake with your payments, contact Service Canada. Yes, their wait times can be brutal. Yes, it's frustrating. But if you're owed money, you need to fight for it. Be persistent. Keep records. Don't give up. And number 5, talk to your family. If you have a spouse, make sure they understand how survivor benefits work. If something happens to you, they need to know what to apply for and how to do it. If you have adult kids, walk them through your CPP situation so they can help you if you ever need it. Look, I know this stuff isn't exciting. I know government benefits and payment codes and tax slips are boring, but boring is expensive when you don't understand it. Every senior I know who took the time to really learn how CPP works, how OAS works, how GIS works, they're getting more money than the people who just assume the government will take care of them. The government doesn't take care of you. You have to take care of yourself. And here's the truth. Most Canadians are walking around with no idea how much money they're leaving on the table. They're not claiming benefits they're eligible for. They're not maximizing their CPP. They're not splitting pension income with their spouse. They're not using their TFSA properly. And over the course of retirement, that adds up to tens of thousands of dollars, maybe more. So if you found this video helpful, if you learned something new about these CPP payment codes, do me a favor, hit that like button. It helps more seniors like you find this information. And subscribe to the channel because I'm putting out clear, simple updates on Canadian benefits every single week. No fluff, no nonsense, just the real information you need to protect your money. And I want to hear from you. Drop a comment below and tell me which province or city you're watching from. Are you getting CPP retirement, survivor benefits, disability? What's your experience been with Service Canada? Have you ever caught a mistake on your payment? Let's start a conversation because we're all in this together. One more thing before I go. If you know another senior who needs to hear this, share this video with them. Forward it, text it, post it on Facebook. Because the more people who understand how this system works, the fewer people will get ripped off or miss out on money they deserve. All right, that's everything for today. Next video, I'm breaking down the brand new 2026 OAS clawback thresholds and how to avoid losing your old age security. You're going to want to see that one because the rules changed and a lot of people are about to get surprised. So make sure you're subscribed, hit the bell, and I'll see you in the next one. Take care, stay informed, and keep fighting for your benefits.